Hello everyone. Let us examine the case of another big company in India in the primary sector, Coal India Limited. Coal India's strength is its sourcing of raw material, that is coal, and it is one of the biggest public sector undertakings. Very few companies are there in private sector which are competing with it. Now, Coal India has been established in 1973. It is a state-controlled coal mining company in India. It has got the largest coal-producing company based on the raw coal production. It is the largest reserves of coal in the world at 67 billion tons, and with proven reserves about 52 billion tons and extractable reserves about 22 billion tons. It operates 471 mines in 21 coal fields in 8 states. It has got 163 open cast mines, 273 underground mines and 35 mixed. 82% of the country's coal production is given by Coal India. Now, what is its strength? What is its strong point? Its strong point is cheaper access to resources. That's what differentiates it from all other companies. Its share face value is 10 rupees and it's still quoted at a very low price in hundreds only. And its dividend yield is very high, 9.8 dividend yield. So whoever is thinking about dividends, all the retired people like me, who want a good dividend for the money that they are invested based on their market price, better go ahead and buy in Coal India. Now let us see what are the financials of this particular company. What is the financial position? First, debt equity ratio, it is zero debt company. It's a very little, all zeros. And then long term debt again is zero. Current ratio is around 2.6 to 3.1, it is very good. And fixed assets is around 0.3, 1.2 to 0.3, which needs to be improved. Okay, inventory is around 1.6, 16 times. It was 16 times in March 2012, has come down to 1.6. There seems to be some very big problem here because its inventory is not moving. Its inventory, which was moving around 16 to 24 times up to 2013, has suddenly in 2015 and 2016 has come down to 8 and 1. So there is some basic problem in moving the inventory in Coal India, and the Government of India is better concentrate on moving the coal that has already been produced, which is held in inventory. Its debtors which was almost unbelievable at 97,000. Now it is around 34 times debtors turnover ratio. Now debtor turnover ratio could have been much better because considering that it is the sole supplier. Then interest cover ratio is around 150 to 23 to 150, even though there is no debt, but interest cover ratio is there. Maybe they have taken other amounts from the market which they are paying interest. Then their returns, their return on net worth is 100%, 40% it has gone up to 100% return on net worth. Return on capital employed has gone from 30 times, 34 times to 85 times. That means during this period 2012 to 2016 it has increased its prices. It has got the pricing power, it has got the capacity to increase its prices. And because the increase in prices are more, and because maybe the imported coal is available for less, because of that the inventory is being held for a longer period. So its inventory is not moving. So it is time that Coal India becomes more competitive and reduces its prices, so that its inventory that has already been built up is used faster. And AP ATM is around 9231%, CPM is around 9240%, PGD time is 9236%. These are all very, very thousands of percentages. And then the most important thing is the dividend yield, and dividend yield is close to 9.5. It is much better than the fixed deposits, and Coal India is very good as any bank available anywhere. So I request all the retired people to put their all the money in Coal India initially and get very good dividend. This is the dividend time. Dividend is going to be declared at the end of for the year, at the end of the March. Now we are in March, so this is the right time to go ahead and invest in Coal India. All the best.